This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Well, it's been a very big week for the markets. The metal, not just the metals, but particularly in the metals. We had the big takedown on Monday and Tuesday, and the state of the physical market has completely changed, not only for silver, but even for gold here in the U.S. And we've also have all kinds of things going on. We have Greece, we have China, so let's get right to it, Eric. It's a lot to cover this week.
Yeah, and Janet Yellen was out earlier this week doing a speech in Cleveland talking about how she was certain that the probabilities are such that the Fed's going to be able to start the normalization process and raise the federal funds rate. And all of the turmoil in Greece is definitely the center stage story, but China's some 35% fall from its peak in the Shanghai Composite Index is but one indication of the huge market downturn they've had there is beginning to get to the point where China is outlawing sales on brokerage accounts, and short selling is being banned, and they're going after even boogeymen like Soros, claiming that Soros is the problem over there, and that
threatening to arrest short sellers or people selling.
Yeah, right. So,
and by definition, there's not much of a market if you're going to arrest any sellers.
Yeah, and it's so true. And you just have to go bust some tea parlors or something where Chinese grannies are playing cards and then day trading stocks on the side. But I put out an article about, I guess 3 weeks ago or 2 weeks ago, talking about how it was interesting that if you actually lay a chart pattern of the Shanghai Composite over what the Dow has done ever since QE was launched in earnest, with QE2 in particular being big guns. To some extent, what happened in China was just a lag where the price appreciation of their move approximated what the Dow has done over the same period of time. It's just that the stock market in China was sucking eggs for the first 3 years that the Dow was going berserk. So, China has a history of being very speculative when it comes to the retail market. I mean, the average investor there loves to just dogpile on whatever's hot, be it real estate or stocks or to some extent in gold when, we had that April 2015 through 2017 drive-by shooting with the big move down in gold and all that. And in 2013, the market completely exploded. There were like 5 times as many retail buyers in China going after gold. So this kind of pattern of off to the races, going to the racetrack, or pick your analogy, casino mentality that goes on in China is very typical. But anyway, all of these things are,
and that's a problem for China when really the investing philosophy is completely different in China than it is here. I saw something, I can't remember where I saw it, but stating that the average time a security is held in China is about 10 days, and they're much more short-term momentum oriented than the average retail U.S. investor. And we're not talking just about hedge fund algos. We're talking about those Chinese grandmas that are day trading while they do their knitting. So
yeah, it's kind of like the 1999-2000 period of day trader crazed U.S. investors in the NASDAQ. It's pretty similar.
Right. Well, let's back up a bit here and break down the trading action in gold and silver this week. Silver into Tuesday was hit pretty hard, broke down below 15. It's been about, I want to say, day and a half below 15. But it didn't quite hit the last year's November lows. I want to say around 1460 was the bottom. In the last 72 hours, the charts have been trading above the previous days. So on Wednesday, silver actually did pop back above 15 and has held back above 15 the second half of the week, trading around 1540 on Thursday, and did the same, held that overnight into Friday's session, and actually jumped another 20-some cents to around 1560 here on Friday. With gold really hasn't seen quite the same recovery that silver has, but it again also did not break down all the way back to that 1130 level. So what's your take here on the trading action with the crash and then as the week progressed here, Eric?
Well, it's mostly tied to what's going on in Greece and secondarily in China, and just the stresses in the financial market and the powers that be not wanting to let things fall apart. And we also had the New York Stock Exchange closed too when they were dealing with problems being reported by their traders throughout the morning. I mean, I have a minority opinion when it comes to people in the alternative asset space and gold community in particular, because I don't think that this flash crash or this closure of the NYSE, when the flash trades are coming in pretty quickly, had anything to do necessarily with the powers to be trying to just turn the market off so that it wouldn't respond to all of the momentum selling that was coming on the back of negative news from Greece. But all that being said, in the early morning hours, there were traders who were reporting that they weren't getting the messages about the order execution correctly on the floor. And all of that context suggests that, in fact, that this shutdown wasn't some kind of powers that be strategic move. And on top of that, the powers that be can control a market crash that isn't involved with high frequency trading pretty easily by just going out and buying S&P futures. And we were only down about maybe about 70 or 0.75% in the S&P 500 on that morning in relation to fresh trading. Half of the decline that day was on account of just the market opening lower, and it wasn't like some kind of HFTC flash crash inspired need to shut the market down, which has been the thesis that a lot of people are presenting as to why the powers that be would have a rationale for shutting the New York Stock Exchange. So it looks like it was just what the media actually reported, which is interesting, because that isn't always the case. When we look at the week as it was in relations to Greece, it's pretty clear that the capping of gold and the crashing of gold and silver further was executed because they were trying to manage the market expectations as to the problems that are going on. And it's the same kind of thing that happened the week before, where the euro actually rose very strongly on the Monday following the whole weekend failure of any kind of resolution in Greece. And that was a counterintuitive move in markets. We always see flight to quote-unquote quality when people are running out of the Eurozone assets in the bond market in the Euro land into U.S. bonds and so forth. The dollar would rise and the euro would fall, but we saw the exact opposite, which was pretty clear evidence that there probably was some kind of giant Federal Reserve swap line going into effect, and no one reported any of that move in the currency markets. And it just goes to show that the financial media is pretty much asleep. So here we are, another round of discussions will be coming this weekend when it comes to this newfound proposal that really isn't that different than what failed the last weekend. Main difference being that in the last discussions they were trying to figure out some kind of a short-term vendor financing arrangement to allow Greece to have more time to do a third bailout that would last over a couple of years and then presumably have some debt renegotiation. And now the proposal is that they're just going to do about $60 billion equivalent worth of new loans in a third package that, for all intent and purposes, really has very little difference with what was discussed before. We still have the open question as to, okay, when do the notion of debt forgiveness in part come to the table? And the Germans have been insistent that they don't want to have any of those discussions until basically the Tsipras-led Syriza government rolls over and plays dead. And now the referendum has come and gone, and Tsipras is saying things that are basically backpedaling. He's claiming that the people in Greece did not vote.
Freudian slip there, Eric. Greece, not Cyprus.
Whoops, I didn't even know. Yeah. So Tsipras is saying, well, the Greek people in the referendum did not vote to exit the Eurozone. They were simply voting an expression of their lack of, feeling like they want to go along with the program because the pain of the economic contraction has been just too harsh. And to some extent there's truth in that, but if you look back about a month, the polling from that point going further back compared to where it is now suggests that actually a lot of people have begun to change their mind when it comes to remaining in the Eurozone, and we'll just have to see where that all falls. But Tsipras is going to have to go back to the parliament and his Syriza coalition and the coalition is split. So now we have this really strange scenario where Syriza, as a coalition, will probably only vote 50% or so of the members of parliament in favor. And in order to get any kind of deal passed, it'll require a coalition of the other hard right-leaning and other segments of the parliament. So I suspect that this is going to most likely result in a failure for the Greek parliament to actually get an approval of the deal, even though Tsipras is backpedaling now. So it's a very much influx scenario. In part, this kind of flip-flopping within the Greek government in and of itself in the parliament is part of the reason why I think that this waltz will continue on for a long time, and that ultimately Grexit will in fact happen, even though the tenor of the reportage in the media within the last 48 hours has been that, oh boy, everything's going to be just fine, because in part France and the IMF and to some extent the United States have been arguing, hey, because of the IMF's report that was leaked last week, it's no longer a forbidden subject to discuss the fact that even if Greece were to agree to all of the terms that the Troika is demanding, that the economy would never turn around and that the ability to pay down debt would never actually succeed, going out to 2020 and beyond. So there is a growing space where at least a discussion of haircuts to the debt are possible. But whether or not that results in actual progress when it comes to this negotiation remains to be seen. And just one final point on that, when you look at what Merkel and the finance minister Wolfgang Schäuble has been saying, he had a really profound quote yesterday. He said, debt sustainability is not feasible without a haircut, and I think the IMF is correct in saying that. And he was in a conference in Frankfurt. But about a minute later, he said, there cannot be a haircut because it would infringe on the system of the European Union. They're dealing with a contradictory situation and basically are terrified of setting any kind of precedence that would inspire Spain and Italy in particular to demand a better deal and some debt restructuring too. So they're playing a negotiating game that has no solution.
Let's get back to the precious metals market here a little bit, Eric. We released an update on Wednesday of how everything really had changed in the past 48 hours, the first half of this week. And really, premiums have exploded this week, and availability has gone from pretty much everything readily available to nothing readily available. And throughout the second half of the week, it's actually spread to gold too, with some products that we haven't even seen with significant delays any of the recent lows and bottoms. And we're talking like that 1130 gold bottom, a year and a half ago in July's 1180 gold bottom. So any of the recent lows, new gold maples, new gold eagles have still been readily available. And on silver, what we saw on Tuesday was simply astonishing. We had already advised our listeners last weekend and as well as Tuesday morning that 90% premiums had doubled and availability was dropping, which we've said lots of times it's a leading indicator of the market tightening up and coins becoming unavailable. And about, 11 or 12 o'clock on Tuesday, the Mint announced that they were sold out of coins and we're not going to be taking any further orders till around the August time frame. And in the next few hours, Silver Eagle premiums jumped by about 50%. One of the largest authorized dealers, about 4 o'clock in the afternoon, we were talking to them, and they quoted us their increased prices. We called them back about an hour later. Prices had risen another about 25%, and they had sold 250,000 Silver Eagles in the past hour. And this is 5 or 6 hours after the initial announcement from the U.S. Mint. So from Silver Eagles were the first thing to vanish and premium spike on Tuesday. It wasn't even before, maybe an hour or two before most of the authorized dealers were sold out. Then spread to maples. Maples premiums are up about 50 cents on the wholesale level, and now availability is they're sold out for a couple of weeks. The authorized purchases are expecting an imminent announcement from the Royal Canadian Mint on rationing supplies, as well as a potential increase in their rates for maples. And from there, it not only spilled over to generic rounds, but also bars, 10-ounce, 100-ounce bars. Some of the private mint 100-ounce bars premiums have doubled on a wholesale level. Same thing for 10-ounce bars. Same things for a lot of the rounds. On Tuesday, the Sunshine Mint, which is one of the leading private mints in the U.S., and they actually mint the blanks for the Silver Eagle program. All of their different rounds and bars went from live, readily shipping on Tuesday morning to they really sold through 2 months worth of production. You place an order now, it's shipping the end of August, so almost September, which is just mind-boggling, the amount of silver they've sold through this week. And it's not just the Sunshine Mint, all the other private mints, their production's backed up several weeks, and that's with premiums doubling in a lot of cases. So we wrote a couple of days ago that at that point we were looking at the potential for 2008 style premiums of precious metals if the paper prices would have declined further. Now, thankfully for investors who are looking to make purchases, that hasn't happened, at least yet. But we really have not seen any sort of easing in premiums or availability. It's continued to tighten throughout the second half of the week. I still hold that if we really get any further downside in the papers markets, you're looking at the very real potential for types of premiums we haven't seen in eight or 9 years.
Yeah, and it looks like the physical market has put a stop to the degree to which the cartel can push prices down. I mean, obviously, I'm enjoying a rather nice plump crow and hot sauce on my plate because we clearly drove way below 16 on silver. But it's the same kind of thing that we see over and over again, even though that particular forecast is dead and gone. The reality is that the same kind of dynamics that check the cartel's ability to just obliterate the market step in, and we see, silver and gold responding reasonably well now, bouncing back up, and the physical market is asserting itself, and that's can be seen without any conjecture going on, and when we look at the premiums, and the cartel probably has been more aggressive in the last 6 months than ever in human history. I mean, we now have evidence when it comes to the derivatives positions that came out and reported for the end of last quarter or first quarter, and Citigroup's positions and precious metals exposure went from under $5 billion worth of contracts to over $50 billion in just a quarter, and that level dwarfs anything that they've been involved with for years. And same kind of explosion happened at J.P. Morgan as well, too. I mean, they try to hide what they do, but there are certain data series that are published that show in black and white terms that this manipulation is massive and that it's gotten bigger now than ever before because the nature of the fires that they're trying to put out are bigger than ever before. And at some point, this has just got to give. It's just a waiting game. I mean, whether 16 or 15 or 14 holds in silver, and then we see bounce backs, within a couple of weeks or a couple of days is kind of immaterial. The reality is that from an insurance perspective, you just have to think about the markets in terms of the way a stacker would look at it. Holding, wealth outside of the system that's not encumbered by counterparty risk has never been more important. And it's very clear that the efforts to keep gold and silver down have never been more aggressive. And now we can actually prove that with the derivatives exposure positions that Citi and J.P. Morgan have. So not much more to say on that score. It's painful. We've been in this long bear market phase, and it's churning, even though we still are seeing the previous lows hold. And I don't think we're going to take those lows out, but time will tell. Who knows? I mean, there may be a point where there's some kind of geopolitical or some other form of crisis that demands a cartel response like we saw this week, because it was clear that they were bombing the market specifically because they didn't want Greece and the turmoil in China to spill over into something bigger. And
while we're on the topic of the cartel being more aggressive than they've ever been, I think readers will appreciate something we just discovered here the second half of the week. Regular SD readers may be familiar with a handle that often posts on SD under Lion Kid, and very antagonistic of the metals and always predicting very low targets. Recent target was stating why silver will hit the $5 to $8 range most likely in 2015. He always often brings up Sinclair's call that 1600 gold would be the bottom for gold, and how wrong that is, and all of the metals experts are totally wrong. But so it's rather interesting that an SD, one of the moderators, Ugly Dog, for the regular readers who are familiar with him, he took the time to go and trace back Lion Kid's IP address, so actually who he is and who he's posting from. And he's posting from number 10 Downing Street. So look that up for those who aren't familiar with number 10 Downing Street. It's the Prime Minister's office, the government of UK. They're
I don't know if it's David Cameron. Are we going to give him special discounts on SD bullion? I mean, that would be pretty cool if David Cameron.
We may throw up the screenshot of the IP address, linking it to we'll see, to number 10 Downing Street. But so
hey, Lion King, what are they paying you?
So that's just one example that it's they are certainly more aggressive than ever. I mean, they're paying people to chill out on sites like SilverDoctors all day and act like the metals are terrible, and people like Jim Sinclair are idiots, and when they're getting paid to do so.
Well, who knows? Maybe the person's just speaking their honest opinion, but happen to be employed by a biased source.
Right. Well, before we close the show, let's shift our attention back to Greece in this upcoming weekend, Eric.
Saturday they have their initial discussion. Sunday is supposedly the big powwow with all of the prime ministers and finance ministers and IMF spokespeople and so forth will be sitting around the table. And it's hard to say what's going to happen now, in large part because Tsipras himself, the prime minister of Greece, has been doing a little bit of waffling and politicking when it comes to how he's going to deal with this negotiation. There's also been speculation that he's been leaned on. I mean, Victoria Nuland, famous for her FU comments about the EU and her orchestration and part of the coup d'etat and the colored revolution before it that took place in Ukraine, was in Greece in March talking to Tsipras, and Varoufakis, who is now ridden off on his motorcycle into the sunset and is no longer finance minister. So who knows? I mean, there's that scenario is also probable, in that he was probably leaned on in terms of, the United States and NATO interests, saying, hey, look, you can't exit the Eurozone because that would create a geopolitical problem and mess that's not tenable and not acceptable. So perhaps that has colored the way he's negotiating now. He's asked for the members of the Syriza governing coalition to give him the authority to go and negotiate this weekend with the Troika people, and that if that authority having been given, if he comes back with a deal that is basically reneging on the whole idea of coming to any kind of agreement without any kind of debt restructuring and debt forgiveness, we will probably see an internal division within the Greek parliament, and probably over the course of a few weeks to a couple of months, turmoil to the point that it'll break the ruling coalition and there'll have to be new elections. And, the whole idea that some European negotiators are talking about now, about having more legitimacy for an agreement now that the referendum is passed, and how they come to that convoluted logic is another question altogether, is really off target. I mean, I think to some extent both sides are still in the same kind of swamp that they were in prior to the referendum, and it really, if something in fact is agreed to over the course of the weekend and going into Monday, that it isn't a done deal, because the Greek Parliament is going to have to affirm it and ratify it. And I don't think that is very likely to happen, frankly, if there's no debt restructuring, and it doesn't seem like, at least with respect to the German position, that there's going to be any debt restructuring. I talked about the finance minister's comments a couple minutes back, and Merkel basically said the same thing this week. So it remains to be seen, but I think that the scenario for a knockdown, dragged out, never-ending drama that we've already experienced over the last 6 months continues for the next couple of weeks to a couple of months.
Certainly is shaping up to be a hot summer, as you did predict, Eric.
Yeah.
in more ways than one. So we'll wrap this week's show there. At least we did have an encouraging second half of the week in the metals, and as Eric noted, as of right now anyways, it seems that the physical market is preventing an all-out rout in the metals. We'll see if that continues to hold in the weeks that come. So for Friday, July 10th, we'll wrap this week's show there. For the Doc and Eric Dubin, thanks for tuning into this week's SD Weekly Metals and Markets.